What up? It's your boy Bass, and y'all tuned in to another episode of Ian's podcast. This is gonna be the first of many special editions where we're gonna be talking about stock, investing them chips, putting your money where your mouth is, but putting your money for the long term investment, man. And we always talk about making the most out of your current circumstance. So one of them is, figuring out how do you budget, how do you put money to the side in a secure place where you ain't gonna have the easiest access to, but also other people won't have the same. You feel me? One way of doing that is in the stock market, as we all see. We hear about it in movies, we see it on TV, but not too many of us really know what's really going on and understanding the terminologies that they're gonna be using and stuff like that. So it kind of just like here and there, we kind of understand it plays a role in our everyday life and in our economy, but we don't really have an understanding of the game that's really being played and how can we be players within that game, and how can we win at it. But first and foremost, man, y'all tuned in to Ian's podcast, and this episode is called, investing in the stock market when it's low. So one stock in particular, you feel me, that we're gonna be talking about today uh, is Ford stock. I currently, own stock in Snapchat. I bought stock in Snapchat like on a humbug. I really was not having like no game plan with it. I was using Snapchat all the time, and the option was there, so I took it. It was cheap at the time. It was probably like $7. It was something real low. Um, it was probably like $7, like $7, $8. And then I watched it go all the way down to $6. And then I just stopped paying attention into it. You feel me? And then I got my earnings report this year. They mailed it to me. Excuse me. I just happened to look at it, and it was like, the stock this year went up to 15. It was at one point, it was at 16 the quarter before that, but it just went down to 15. And I'm looking and I'm like, damn, when I like doubled my investment. So that means how many shares I bought, you feel me? I doubled that already. And I just been sitting on it, didn't even know about it. And it's a process to get the money back out, but that's the whole thing. It's not that accessible, but it's secure though. It's there. I know that it's there, and I got access it's a process, but I got access to it. I can get it out if I want to, sell it. Man, so we gonna go into what is something that you see a lot of these apps. It's a lot of apps that do it. You feel me? Like Acorn. You got other mobile apps where you can basically buy stock. I mean, even Cash App do it now too. We're going to have that link in the description below. You can also see about that too. Even Cash App do that too, where you can basically buy a percentage of a stock, like micro stocks, or you can buy stock via the app. They got Webull. We're gonna have a link to their app and to their website too. You got Webull, which is one where you can also buy stock, and I believe also I got a stash account too. That's another one where you can buy stock. But I like to buy stock off my Webull account, off my Acorn account. I tested them all out. They all pretty good. I just like to buy those because they're just real convenient. One of them just take the money out every time, I make a purchase, like 25 cents every time I make a purchase. And the other one is just because I like the way Webull look as far as just learning about stock, just playing around with it. You get to see like the whole trends, and you get to see like the whole reports, everything like that. So that one got more information if you're really trying to look at the data of a company, get the news, all that type of stuff. That's why I vibe with Webull on that note. But I'm gonna go back more into, low buy-in with high dividend yields. And what that really means. And that's one of the main reasons why I'm focusing on Ford stock. When I looked at it last week, it was at $4. It was at $4 and some change. Man, looking at Ford stock today, man, Ford stock is right now, it's at like $5.42. Right now, it went up, but right now it's currently down, 0.37%, which ain't really nothing. It's just down 20 cents. Well, 2 cents actually. But it just went up in a week. But that's when you think about buying into a large corporation like that, even when it come down to like Chrysler and General Electric, all these companies right now, their stock is below $10. Now, a lot of people be thinking like, man, the only thing they hear about is stock markets crashing and all this type of stuff. But when you think about the wealthy, people with wealth and people that invest money, they understand that when the market is low, that's the best time to buy in because the prices are generally low, and they understand the market, and they're basically forecasting that the market is going to increase at some point in time. You feel me? Then you can, depend on what is your plan. Is it long term, or is you just trying to make a quick come up and get out, or is you trying to, wait it out long term? But whatever your plan is, you do have an understanding that at some point, depending on what you're investing into, it's most likely going to increase. So when we think about America, the car industry is one of our backbones. So I feel like we have seen that America would do its best to try to make sure that those companies are, stay afloat. And granted, not to say that is a reason to invest into that company, but it was also the dividends yield. Ford had one of the highest dividend. I think it has the highest dividend yield in its industry. Matter of fact, don't quote me on that. I could be wrong. These things change all the time. But I was looking at some information in the quarter that I was looking at. It said that it had like one of the highest dividend yields in this, in this industry, in this market. And that's currently, I believe it's at currently 6 point. So, that kind of helps keeps things, at a consistent fluctuating, rate. But the reason why I would do this, and the reason why I am, is just due to the fact of what we were saying. It's securities. It's also a way of investing. Putting your money to the side, like especially during like a crisis or during times like this, where generally when people ain't working as much and things of that nature, you got to think about what are you doing with the little funds you do have. And when I say little funds, I'm not saying to say big bank, take a little bank. I ain't coming at nobody pockets and nothing like that. I'm saying like as in when you could compare, your bank account to say the 1%ers or the wealthy. Where it's a little bit more financial security. You feel me? So just going back and just looking at that, like, so say with $20, if they say they selling stock for $4 and some change, or they selling stock for $5, like $4 and some change, you can buy 4 shares for $20. In comparison to buying, some junk food at the store or anything like that, you could put $20 over there and let that, accumulate, more money for you, basically. Like, even if it is 60 cents, you let your money work for you. Long story short. And even when their stock prices had dropped, you still see that even when their stock prices dropped, you still got paid that 60 cents at the end of the day. So your money's coming back in some type of form or fashion. It might come back slow, but that's just due to your current situation. You can only buy in at a certain price, but you take it as you come. And that's one of the key principles, especially when you start thinking about ends. We call it eating in the streets because, that's our definition of making the most out of the current circumstance. Like, we say that is the definition of making your most out of your current circumstance is eating in the streets. Because, you're just trying to eat. Like, as my homie said in his song, man, Monday through Sunday, we on the grind. So that's who I'm talking to, the 9-to-5ers, the people that's really making everything move in our everyday life, the people that's really putting them boots to the pavement. Really got to start thinking about investments and start thinking about putting in securities and stuff like that. A lot of times we always say like, yeah, I'm going to save. I'm going to put my money in a bank account, or I'm going to put my money over here in a shoebox or something like that. You start thinking like that's still easy and accessible. If something was to happen, it's like sometimes you need to put it in a place where it's out of sight, out of mind. You can't really reach it. And even if you wanted to reach it, the process is so annoying or so strenuous or something like that, like difficult, that you're gonna be like, man, it ain't even worth it. I'd rather just go a different route. And you just let that sit there. Like I said, I had mine and Snapchat, and I forgot all about it. You feel me? I done went through hard times and some more stuff. And you feel me? And I still did not try to go sell the stock because it's a process. And I needed the money immediately. Like I needed it in my hand. So I never really actually sold the stock. So I allowed it to actually grow. Situations change. Things like that. And it's still there. And it paid for itself. My money's working for itself. It might not be nothing major, but it's still working for itself. So it's like looking at it long term down the line. If I still have it by the time I'm 40 or something like that, that seed will turn into a huge plant. And that's generally how the game is played a lot of times. But most importantly, like let's keep it real. Let's talk about risks. There are risks. As y'all see, y'all watch on TV. That's the one thing that always hit the media and everybody see them the most, or they publicize the most in media and all that type of stuff, is when the stock market crash, or when the stock market is at a low, or wealthy people controlling the stock market. The stock market is this and that. The stock market is pushed by rumors and all this type of stuff. So yes, there are risks, and one of the risks is that you're buying in low, especially when you're coming from certain situations, you probably don't really have the option to really buy in high unless you work for the company. And if you work for the company, take full advantage. Take full advantage of that. Make your money any way you can off them suckers. I ain't gonna say them suckers, but make just make that money and invest. If you're gonna be working there, you might as well invest into own a percentage of that company. Don't just work for them. Learn how to work with them. In layman's terms. But going back into just the risks, that is some of the risks that it is a company. Markets do change. It does go up. It does go down. And this is all based off of human behavior. What are humans doing? What are we doing? What's going on in the world? So yes, that is a risk. But you also got to think, what is the risk of you putting your money underneath your bed or putting your money in your house? Your house can burn down. A hurricane can happen. Floods. All type of stuff can happen. You feel me? House can get burglarized, anything like that. So there's always going to be risk when you're talking about money. And in particular, you're talking about anything of value. There's going to always be risk. Because even if you put your money in the bank, you got to risk the bank being robbed, or banks do also go bankrupt as well. We also have seen this in our lifetime during the 2007, 2008, when the stock markets and the housing market crash. We've seen, banks do go out of business. And what happens when those banks go out of business? Man, my bad. I had to interrupt this episode just to let you know. Thank you. We appreciate your support. I appreciate you listening to the episode this far. So I just want to let you know, thank you. You feel me? And if you really, appreciate what we doing and what we got going on, man, it takes you nothing to go ahead and share this episode when you're done with it. Or, leave us a voice message. We have you on the next episode. But I ain't going to talk too much. I'm going to let you get back to your episode. Peace. So in all, it's risk with anything, especially when you start talking about your money, anything of value, just protecting anything of value. There's gonna always be risk. Anytime you talk about investing your money, there's gonna always be risk. Anytime there's high returns, there's probably gonna be high risk. Unless you find that, like that sweet hidden gem, or you find, that perfect opportunity. But just always keep in mind, you just try to make the most of your current circumstance, man. And a lot of times, a lot of people, they say like, I don't want to say like they say like they living for the day, nothing like that. But like just they don't really trust the stock market. They don't trust all these type of things. And I'm like, man, like, but you trust the bank? The bank is in the stock market. Like, like you trust your house can burn down. So you trust yourself, you can get robbed. Like things can happen, but it's like you just still gotta live life. So it's um a lot of this kind of came from a book that I read too. It was a hundred bag a hundred baggers. I own it home. I got it somewhere right here. I want to say it's called 100 baggers. They were just talking about buying low, basically buying in at buying stock that's low, uh, but then they also got dividend returns. So it's like gradually over time as those stocks grow, and you start to acquire more funds, just reinvesting that money into buying different stocks that also has dividends, and then you start to just build like a kind of chain. And now you really just reinvesting the money that you made from your investments until you start getting your money back. Um, but that's just more so just how I got into the game. But just more so for you, it could be a little different. This podcast can kind of inspire you, man. But before we head out, though, I want to talk about, just going back into that Ford had a current yield, dividend yield. Well, just their current yield was 6.49%, man. Man, that is a good percentage to have, man. You start looking at these different companies, different businesses. Some of them got one, some of them got two, some of them got seven, some of them got 12. It just really all depend on the company and the industry and the market, just how they structure, man. But then that kind of helps you get an idea of what your back end. Well, my bad. I mean to say back end. I mean what your annual return gonna be. Sometimes I'll be slipping off. I be around a lot of music artists and all that type of stuff, man. They was talking that back end talk. But you get a current understanding of what that is. And one another blessings with all this too is, man, you start to become more financial literate, man. You start to see like different ways your money can work for you. And you start to get an understanding of how to expect returns. You feel me? How to get a return on your investments in the business world. You feel me? Everybody talking about, man, I want to get a return on my investment. If I put money here, I want to get money back. I want to get a certain amount back. But it's like you're talking in amounts. Now let's talk percentages. Now let's talk what it's a percentage based upon. You feel me? And that's going back into that whole formula that they have to, making what is the actual dividends amount. Just coming up with, with what that percentage is, the actual formula. So, it's your boy Baz. I ain't gonna talk y'all ear off, but I do want to hear from y'all. So please chime in. Let me know what y'all got for me. What up? So I just need to know, do you invest in the stock? Are you interested in stock, man? Is this a topic of the discussion that you got a question or just something that you want to let your boy know? So maybe you just want to say what's up. Go ahead, hit that link. It's in the description. Leave us a voice message, man. We want to hear your voice, man. And who knows, man, we might have you on the next episode, man, or shout you out on the next episode, man. Show some love, get some love, man. We all need love, man. We is love, man. We are the culture, man. It's your boy Baz. Ends podcast. We tuning out, man. Don't forget to go ahead, like, share, and subscribe, my baby.